Welcome. This is Bloomberg Quint Stock Check at 8:30. This is where we take you through a bunch of important stocks, the news, as well as how our experts are looking at them based on the developments. Today we have with us Mayuresh Joshi, Head of Equity Research at William O'Neill. Mayuresh, good morning and thanks for joining us. Today, we're going to talk about four stocks. Essentially, one, of course, is Avenue Supermarts. We've seen a steady quarter, but also, well, a problem in outlook. Bharti Airtel, which is looking to raise funds in Hdfc Limited, along with the fact that we've seen some amount of, neutral cues when it comes to bottom line. And of course, one stock that Mayuresh likes in today's job trade. Mayuresh, let's get on with it. I'm going to start off with Avenue Supermarts. We've seen a steady quarter, again, largely on expected lines, but the company also suggested a 45% decline in the April sales. Now, it's not as much about just the outlook, it's also about valuations, because I was looking at it in Bloomberg consensus, still assigning 100 times price to earnings for FY21. What is your view on Avenue Supermarts?
Morning, Avga. No, so clearly, as you pointed out, the management commentary, if you look at the transcript, April was, again, I think, in terms of the turnover itself, a very, very soft month. What they've also mentioned in their press release is that May is the month when they saw a bit of retooling happening in terms of both the top line, stores probably streamlining at this point of time. But largely, again, I think you probably see the entire brick and mortar model that it works out of. And the confidence of people to probably come out and start shopping, because if you look at the top line elements of Avenue Supermarts, 52% comes in from the essentials or the grocery part, 20% is personal care, FMCG, so on and so forth. And the rest probably is apparel and the other stuff. So largely, again, I think the non-discretionary has also picked up, is what you mentioned. 35% of the stores have started doing that. But what you probably saw is an impact in terms of EBITDA margins at 6.4%. So on an annualized basis, it did come at 8.4%. I think valuations is something that also will be a close eye that a lot of analysts on the street will be watching out for. So even at this point in time, I think it trades 10 times forward multiples. Plus the added competition that has come through the last couple of days in terms of JioMart actually launching its app. So I think what kind of an impact does that actually have? So I think the addressable market size is huge. They've done a constraint way in terms of store openings, so 214 odd stores at this point of time. But yes, I think some pain will be very, very evident in Q1. I think analysts will have to adjust their numbers on an annualized basis, which they have for this year. But do they continue their track in terms of consistent earnings growth, top line growth? The sales per square feet has also come up at 32,800 rupees. So yeah, I think mixed bag, as I would call it. I think the stock might just consolidate, might have a negative downtick also in today's trade, but it might just consolidate in the range bound fashion based on all these factors and where valuations are. I don't think that the stock might react very, very positively from these levels.
All right, fair enough. And it's an interesting factor that you pointed out is the entry of JioMart. That's going to be, very, very, a factor that's going to be looked forward to by a lot of investors. But we move on to a related topic. Since we've spoken about Jio, I'm going to talk about Bharti Airtel. Now, we understand that the company is looking to raise funds. In fact, it's nearly $1 billion from what we gather. Of course, Reliance Industries, as a competitor, has already raised a significant amount of funds over the past few months, and Bharti Airtel is looking to garner those. And we will see a handful of block deals in today's day of trade. But Mayuresh, only speaking from the perspective of Bharti Airtel, this has been one of those stocks which has held its own, even while the rest of the market has seen a substantial correction. What's the way forward for Bharti Airtel?
No, Gams, I think very good set of numbers. If you probably look at how the top line growth was, if you look at the RFQs at 155 odd rupees, I think clearly what played out for them was the trend in terms of data consumption. With all of us working from home, I think a lot of data consumption is evident even in the next few quarters to come. The second element is that the African business did hold out pretty strongly. So the cash flow from operations for the African business did hold out, which basically meant that all the capital raising that they had done earlier the expectations that we probably have today in terms of the debt reduction on the balance sheet as well, and what probably happens in terms of the ARPU improvement on the wireless business itself. So if you go back to 2015-16, ARPUs were as high as 180, 200 odd rupees. So even if Bharti is able to get close to that, because they need to sufficiently fund their EBITDA and their capex as well going forward. So they've cut it down significantly in the last financial year. I think the transition that might be required in terms of more 4G subscribers being added to the network, the element of network cost inching up a tad bit, has still meant that capital raise and operating free cash flows to ARPU increases are mandated. So I think it is in a very, very sweet spot, because if you look at the third player, Vodafone Idea, I think the balance sheet dynamics from a net debt to EBITDA level still appear very, very weak. And they will be required to take significant ARPU increases, which obviously benefits Airtel and Jio as well, because it's going to be a level playing field for all three of them. So yes, I think numbers should improve going forward. I probably see this as a positive move for the sector as a whole. So yeah, I think anybody holding on, as I've always been, should continue holding on to money.
Fair enough. Mayuresh, also want to touch base with Hdfc Limited, only because it's the largest NBFC in India. We've seen its net interest income rise around 12%, but we've also seen a drop in profit. And I reckon that is largely on account of provisioning. What's the way forward for HDFC here?
No, again, I mean, a decent and a solid set of numbers, if I would call it. I think if you probably look at the excessive provisioning that they've done, 1238 odd crores compared to 398 on a comparable basis. There's still 6,800 odd crores in terms of excess provisioning on their balance sheet. So I think the conservative approach is very much on display. Spreads were, I think, very much in line at 2.27%. NIMs all-time high at 3.4 odd%. The skew in terms of the loan book itself, individuals still form 76 odd%, which is again a very, very solid and a very robust sign in terms of business dynamics going forward. Yes, asset quality pressures on the flip side, specifically in terms of the non-individual portfolio, which came at 4.95%. That might be a little bit of concern, specifically in terms of the macro headwinds that we might face. And again, the moratorium issues that all of these NBFC stroke banks have probably adhered to at this point of time. So yeah, there are some pluses, there are some minuses at this point of time. From a technical perspective, it's obviously trading way below its key averages. But yeah, I think it's a leader within its space. So yeah, I think it's a solid franchise. I think the only problem with the price recovery is it might take a little bit longer. But in the end, I think it's a solid franchise within the business.
All right, fair enough. Then Mayuresh, let's conclude by taking a view on one thing, one idea that's looking interesting to you, or one idea that you have actually downgraded because of concerns coming through.
No, so I think pharma and to a certain extent, the rural theme is something that we still continue to like. So I think Coromandel International, Agam, they are coming out with numbers today. So I think I don't want to preempt numbers, but I'll keep a close watch on this stock. Again, I think the segments that they cater to, both in terms of the nutrient business as well as the fertilizer stroke crop protection business, has held up pretty well. I think even within the lockdown pressures that we probably witnessed, I think these players will be the first, or they have been the first to probably come off. And again, I think the kind of restocking that will take place, the Kharif season is just around the corner over the next few weeks. The sowing has already started. And again, I think the balance sheet dynamics, I think very, very strong balance sheet, return ratios, minimal debt on their books. So yeah, I think I'll wait out for numbers. I'm not preempting that, but this is one stock that I would probably watch out for in the next weeks.
Fair enough, Mayuresh. We'll watch out for that. But thank you so much for joining us and taking us through your views on the important stocks to watch, as well as your pick this morning. But don't go anywhere, viewers. Stay tuned to Bloomberg. Quint has lost my lined up, and we'll keep telling you more.